What's up, guys? Raymond here again, and we're continuing with the financial statement analysis. We're going to do a couple of breakdowns today. Let's get straight into it. So we're already in the investment account. Let's just go straight back to Germany. We need to go to search, and we need to go to browse all, Germany, materials. So we left off at Brenntag. We're going to start off with Covestro. So straight away, let's look at the chart. As you can see, I've already got some cash already invested. So it's gone down by 1%, which of course doesn't necessarily mean it's a bad or good stock. We need to do more evaluation. 113% rise since its debut as a stock since 2015, which is about, so it's 113% over 6 years, which I wouldn't say is very, very good, but it's definitely a positive because it's not negative. So let's go into the figures. The employees, they have 18,000, which is definitely good. Anything over 1,000 employees show that the company is large. Key ratios, it's a large cap stock with over 10 billion as its market cap. The price to earnings ratio is double what we're looking for, but it's definitely still healthy. 20 as the PE ratio. The revenue figure is 10 billion for the current financial year. Actually, let's just check if it is so 10 billion for the current financial year. Earnings per share is 2.73 euros. Compared to the market price, which is 56 euros, that's not great. The dividend yield is over 2%, which is not quite healthy. I would say 5% minimum is what you're looking for in any stock if you're investing purely for dividend. Unless the company has high turnover and a high net income, then you can get away with low dividend yields. Beta is 10% over the market average. So we're going into the income statement. The income statement shows that the past 3 financial years, excluding the current financial year, the profit margin has been quite low. Revenue figures are quite high, but the profit margin is quite low, which is not good. It's around 4.29%, just above the average retail sector. So the balance sheet also shows that the debt to asset ratio is quite high, over 50%. So just looking at those two figures right there, the income statement and the balance sheet, for the profit margin you're getting, I don't think the debt level should be so high, because the interest paid on the debt will just wipe out most of the profit. So the only real value you're getting for this company is its size. Let's look at the last statement, which is the cash flow statement. So the net change in cash is positive 656 million euros, which is awesome for the last financial year. It doesn't have the 2021 financial year, which is a bit concerning. 2019 negative 117 million, and the year before negative 367. So only really a positive of around 200 million, just under 200 million in net change in cash, which is okay, but considering its market cap, or let's actually look a bit more. So considering its total assets, which is about minus the liabilities, it's about 6 billion. So, yeah, about 5 or 6 billion. Considering that, 200 million for a year is not too great in it as a net change in cash, because that means it hasn't really added much value to the company. So let's just check one thing before we go. I just want to check how much it's improved, how much the stock price has increased in the year. 27% is actually pretty good, considering the net change. The only positive of this year is really the net change in cash. The profit margin hasn't been too high, but yeah, overall that is the company Covestro. I hope you guys have enjoyed. I'll see you in the next one.